Morning, and welcome to the second hour of TheoTrade. You know me, I'm Professor Jeff Bierman, and I'm broadcasting you live from Chicago and Ill. And today is Friday, it is October 17th, it's 2025. Hello to the usual suspects. Hi, Guatemala. Trains, you live here. We want you to live here. Hello, Tim. Hello, Miguel. And Peter Schrader, it wouldn't be a day without you, without your, driving it up here. So yeah, I'm up 0.2%. I'm killing it. Yeah, me too. I'm flat today and I'm happy. Needless to say, we're going to finish up the final installment of Lookout Below, tools to measure market drawdowns. We will get there. And these are the two funkiest, most obtuse, sophisticated tools. And if you want to go out and research them, good luck, because it'll take you 4 hours to figure out how to put it together. Just come to Uncle Jeffrey and I'll show you one line. All you need to do is look at one line and go, oh my goodness, that's where the S&P could draw down to. And I'm like, yep, there's so many ways to measure volatility to the downside in this business. And I'm just opening up the Pandora's box. Speaking of Pandora's box, how you like that little transition? That is the actual today's theme. So the market's up and you're like, yay! You know, there's a movie called Things to Do in Denver. And there's a famous line from that from Andy, Alec Baldwin's brother, who says, you're dead and you don't even know it yet. Like you're dead and you know the market's dead. It doesn't even know it yet. Sorry, Gianni, we're going down and we're going down hard and fast. We've already opened the trap door to the downside, 100 points today. So we're just going to fill that in over the next few days. It's a done deal. The question is, how much are they going to put up a fight before it rolls over? I just don't know. But the advanced decline is trying to defend it as well as it can. I don't think it will towards the end of the day. I would not want to go long this market over the weekend unless you own the right things. Like I own General Mills, that's holding up. I own Budweiser, that's holding up. I own Ball Corp. All the things I own are not going down because they're bottomed out. I don't have to worry. But we're going to talk about the Pandora's box. And I know a lot of you have heard the expression, I know Pandora's box. Listen, I know that you know Pandora's box. You don't have to relay that to me. So what is Pandora's box, people? Here's a lovely stylized lithograph. Beautiful. And this beautiful, good looking stuff here, right? Where it's an artifact in Greek mythology connected to the myth of Pandora in Hesiod's 700 BC from the poem called Works and Days. So Hesiod related that curiously led her to open a container. Hesiod's obviously a female. Here's Hesiod right here. She opened a container left in the care of her husband, thus releasing curses upon mankind. Later depictions of the story have been varied, with some literary and artistic treatments focusing more on the content on Pandora herself. So the container mentioned in the original account was actually a large storage jar. That's what it was. But many people have different interpretations. Some people think it was a box, it was a chest, but the word was later mistranslated. So the idiom said, you know, actually it was more or less a box than it was a jar. But there's many ways of going about this. Now, according to Prometheus, Hesiod, according to Hesiod, Prometheus stole fire from heaven. So Zeus, the king of the gods, took vengeance by presenting Pandora to Prometheus's brother Epithemius. Pandora opened a jar left in her care containing sickness, death, and unspecified evils, which were then released into the world. Thus, though she hastened to close the container, only one thing was left behind, usually translated as hope. You go, here I'm going with this deal, members. All of you are bullish. Gianni, you're living on hope, guy. I'm sorry. The Pandora's box is open. It opened yesterday. You saw the drawdown today. We ballied up. I just don't care. It could have been a pessimistic meaning of deceptive behavior. But what is the Pandora's box? Like, what is the real underlying meaning of a Pandora's box? Okay, it means you've already opened up, okay, what you can't put back in the box. You've opened up a drawdown to the downside. You've opened up the fact that fundamentals do matter. You've opened up the fact that Bitcoin is just what it stands for. It's Don Soldier. It's just a scam. And people like, you know, I'm going to buy it because it's cool and sexy. Whatever you want to pay for is what you'll buy it. But you have no what's called functional or what we call usage at all. It has no, you know, fungible value whatsoever. So the idea here is the Pandora's box is opened. So if you want to go buy this market, don't listen to me and go buy it. But when 6 months come out, let's see who wins this game. People, this is a dangerous place to be. The Pandora's box is opened, and here's the thing that, you know, you have to come to terms with, okay? You have to come to terms with this. And we'll talk about this in the second half today inside my model, because I'm going to show the MACD Reverse engineering the RSI. Okay, there's the MACD model. Here, what does it say? What does the model, my model say, people? And I'm trying to get this to work, and it's like stuck, but it's not working, and I don't know why it's not working. It looks like it's like frozen, and I may have to close it. I can't figure this out, but I don't know. I may have to it's unlock it, cancel it, let's go back. I can't figure out why it's locked up, but it is. My whole computer's locked up, apparently. So Don was right. There is something. Uh-oh. Says I have to cancel this and see if I can go back and get this to work. Here we go. Okay. So it's on my side. So I just want to show you this. Now, this is mine. It's not yours. And you can come back at me and say, you're a moron. It's okay. It's okay. I made a lot of money living off this. I've said time and again, until this breaks 6,500, I'm not getting bearish. Every dip will be bought. I know that because the Fed's going to cut rates twice. That's if it doesn't, we're in trouble. You also know every dipper is going to buy. You also know that Wall Street's going to defend this, the powers that be, because it's rigged to like window dressers. If this goes down and fills in that gap, that's the end of Wall Street for like a decade, literally. Because people are going to go like, a third year, not up 25%? Of course not. The issue is they're just maintaining this. It's like maintenance. But until we take out 6,500, I can't get bearish. Sorry, you guys can all get bearish, but I won't. Once we take out 65, then we're going to threaten the 6,150. If we take out the 6,150, okay, it's all over but the crying. It's all done. The bear market's over, and now we have to start to play to the defensive, to the downside. So you've still got life left in this market because the dippers are never going to give up. Dippers never give up. Dippers will buy at the high. Dippers will buy at the low. Dippers buy all the time because fundamentals mean nothing to them. All they care about is one gigantic Xbox or video game, which is fine. But there's the line in the sand. I've told you a million times, you have to take out 6,550 to 6,500. You haven't done it yet. Notice how we traded at the edge. We haven't broken it. Until we take it out, okay, it's just simply you're on the edge. But it doesn't matter. The Pandora's box of all the bad things that are going to occur and can occur, it's wide open. Now it's wide open for destruction. When will it happen? I don't know. But the thing is, it doesn't have to happen right away. It can be on a delayed reaction. It can be on a fast reaction. But this is setting up for something much deeper. So I don't really care that the daily is broken because the daily doesn't mean anything compared to the weekly. Oh, look, the daily. It's right against it. See that? We're also in what's known as a triangle. See the triangle right there? So one of two things is going to happen. Either we bust back up into the bullish configuration, Gianni de Poche, or we take out the apex of the triangle and we tank. So right now you're in a 50-50 and the volatility is being constrained. It's going to blow up. The volatility is going to explode, people, one way or the other. It's not going to stay here in the next 3 days. It's not possible because you're coming to the apex of a triangle. See that? So it's either going to explode upward or explode downward. What usually is the logic here? 2/3 of the time, 64%, it breaks to the downside. You have a 2/3 probability we break down. I'm going with the odds and saying we break down. Now, let's get to the three things why you should be selling today. I'm going to come up every single day like forever until I make my point. So on the current slide, you obviously have a trio of banks. I call it deja vu. Like, where have we heard this before? Republic Bank of San Francisco, Silicon Valley Bank of Palo Alto. Like, this doesn't jog your memory. There's a trio of banks that were connected to fraud and broader issues. Jamie Dimon comes out today and says, don't worry, it's not us. I know it's not you, Jamie. Don't worry. We're not attacking you. It's not likely to happen to JP Morgan, but there might be a minefield of other banks, regional banks, as Garrett mentioned, who are connected to this bad paper. Obviously, Jefferies was connected to it. And so what I'm saying is that if the regional bank is being funded by the footprint big bank, then we have massive problems. That's where I'm going with this. That's where I'm taking you. So it's like a Pandora's box. It's like the cockroach theory. A little bit goes a long way. So if you didn't see it yesterday, I'm surprised that Garrett didn't bring this through because Garrett's great at this. You just throw down Zion's Bank. Oh, it'll bounce today. Everything's okay. Like Jefferies had to come out and defend itself today. Okay, here's Zion Bank. You think I want to buy that? You're crazy. I'm not buying that. It's a technical breakdown. I don't buy breakdowns. It's got to consolidate for a while and change the technicals. The bank is trading at a very reasonable valuation. Like people say, what's the issue? Well, that's not the issue. If you're looking at 9 multiple, that's not the issue. The issue is, do you trust their capital structure and fundamentals? And I don't. There's probably more like this. This will leave a constant pattern of uncertainty. And with that constant pattern of uncertainty, I'm giving you like fair warning, just giving you fair warning that the more you get headlines like this, you're thinking it'll eventually be mitigated. It'll eventually be like they call it the cognitive dissonance theory. Like the more bad news comes out, we'll just normalize it. It won't. It only normalizes at the bottom. High volatility at the top is a negative sign. High volatility at the bottom is a bullish sign. But if you're thinking that this is the bottom, you might want to go look back and realize, okay, you get all that bad news at 19 bucks, then I'll declare. Then I will come out and I will rightfully declare you can step in and buy this with both hands. But not over here, I wouldn't do it. I wouldn't trust it at all, even with that 9 multiple. This is going to put the market on edge in the shorter term. It might start to fade. The second is give a little bit. Now, I've been saying this for a while. I did the interview on marketwatch.com, and the editor and the author who came to me said today, like, you made the year for them. Because I said to them, as soon as Bitcoin pops to 117, it'll be the greatest short ever. There we go. That's what I told you. I called that one. I told you. This is going to break down and end in pool of tears. It's exactly what Don says. They're probably going to take this down to 100,000. They're going to rope a bunch of people in. It's always like Don says. They will rope in people, and then they'll try to bid it up. And when it bounces to 110, if it does, that will be the crushing descending blow where it just knocks it down to 80,000. People, I've said this a million times. If you can't value it, you can't trade it. And if you think you can, I have horror stories from clients from years at Theo who thought they like, I can trade this stock and they're down like 90% on it. And they always said to me, I never thought it mattered. It always matters. You know, even if it's not it's a growth stock, it still matters. Now, I'm not as bearish as Don is when it comes to the stories around AI. I'm not. But there are stories. This to me is a complete scam. If it rolls over on the monthly, it's all over. Forget the weekly. The weekly's nothing. The monthly is way more important. So I'm just telling you right now, go look at the 5-year monthly. If you see it starting to break down, you know you're in trouble. It hasn't broke down yet, but if it gets underneath that signal line, it'll start the beginning of a multi-year, multi-decade correction. It's gone already from 20,000 to 112. That's a 600% return. If you didn't take it, I would fire you. I'd sue you. I'd throw you. You're done. 600% gain. Walk away and friggin' retire. What the hell's wrong with you? If it breaks underneath the 100, it's going to open the trap door for much more damage. I call give a little bit, pun on the term bit as in Bitcoin. You get it? Okay, good. I'm great. I got my point across. Bitcoin is going to drag the market down because many retail investors who own this are going to be forced to liquidate this. And this is correlated to the stock market. So they levered up on this as a form of wealth to build equity positions. When they liquidate that, they will be liquidating equity positions because it's the disposition effect. They will start selling their winners, offsetting tax harvesting with their losers. That is going to punish the market. Get ready, people. It's coming. I don't care about today. I don't care. It's just manipulation. The Pandora's box is already opened. Give it about, I'd say about a month, maybe 3 or 4 weeks. We need to go through 6,500. Until then, I won't be bearish. But Bitcoin, it's already there. It's already broken. So once you break, there's no turning back. If I were you, I'd start to like curate my portfolio and figure out what's connected to Bitcoin because you're going to be in a lot of trouble. Tapping out. Now, I understand American Express, and I'll cover it. Credit where credit's due. Okay. They came out yesterday on Bloomberg with the latest data on credit cards. So the credit card data showed softer U.S. retail sales. The part of that they said that's not softening is the high-end customer, which is why American Express did so well because they lifted their black card and they lifted their gold card fees. Like it's like membership fees like Costco. They lifted them up like 200-300%, and that helped offset, some of the slowdown. But the fact of the matter is usage of credit cards is becoming lower and lower, which is why I bailed on PayPal. I sold PayPal at 75 and I'm not coming back in. And then people like, I'm buying Visa today. Yeah, you're buying Visa because of MasterCard. I mean, because of American Express. Don't be fooled here, people. There's a credit card crisis coming. There's going to be defaults. It's already started in cars. We already know. The next shoe to fall will be credit cards. The data, I'm just the messenger. The data is already showing a slowdown in the economy. The job market's not falling out of a cliff, but it's hit a wall. Okay, the next like crisis where they come from, it won't be real estate. It won't be COVID. It won't be .com. I don't even think it's AI, Don. I'm sorry. The next crisis will be found somewhere in bad paper in credit card companies and bad paper on regional banks. It's going to come there at some point. Now, individual stories. I've got about 4 of them real quickly. Give credit to where credit's due. So I'm not bearish. I'm not bearish on American Express. So get that out of your head. I just want to point this out. So AXP is up a whopping $15. Okay, fair enough. The stock had come down, it had priced in risk, and now it's taking it back. It should. This is logic. Like most of the markets, every day is broken. The cause and effect is just broken. The markets are detached from reality. This is how normal markets act. You buy on the rumor, you sell on the risk, you buy back because the earnings are better than expected. So they came in at a 414 handle. It was about 20 cents better, which is enough. But it wasn't the earnings beat that mattered. It was the conference call and the confidence that the CEO imbued saying, listen, we're well capitalized. Our high-end clients are spending consistently on expensive things. We're raising our fees. That was it. As soon as they said they're raising their black card and their gold card fees, that's what catapulted this, which goes to my point. We're getting inflation. Whether you like it or not, TheoTrade members, it's coming. It's coming hard and fast. Inflation's not coming down. So when the Fed cuts, it's just going to create another inflationary bubble. So they'll cut rates and inflation will just jump another 5 or 10%. Good for you, Jerome. Smart guy. This is inflationary because they tell you they're raising their fees. Second on the back of that, okay, I'm going to jump to the third one. The third one is CSX. Now, I'm sorry I didn't buy this. I originally bought it at 30. I sold it at 37. It came back down to 32. I got a little anal. I missed it, but I don't like to buy ahead of earnings. Freight train. Kind of like the song from the Allman Brothers, the song called Melissa, where there's a freight train coming and she's running across the train. CSX's earnings are impressive as hell. But this isn't about CSX. Like you're thinking like, there's a trade here. There's no trade here. The trade was here. I missed it. I should have gotten in right there, taken the $4 and headed for that. This is a Bierman Genesis Cog dream trade. Look how the algos manipulate, how algos rig this. Beautiful, it's sexy. Look how sexy that is. That's an algorithmic channel you cannot draw. It's textbook. Missed it, wanted it. There's the buy right there at 32.74. It's okay. I don't buy ahead of earnings. Earnings are not good. They're great. These are really, really, really impressive earnings. Like I want to get across to you. These are impressive earnings because a stock like this normally reports earnings in line or misses by a penny. These are good, but here is what got the market excited. CSX said that they were going to raise freight charges 5%. It has nothing to do with this stock. We're going to have inflation. I don't know where Powell gets his information from. The guy is a bold-faced liar. Jerome, you're a liar. Talk to the CEOs. American Express says, we're lifting fees. CSX says, we're lifting freight fees 5%. Okay? Where does that leave us, people? That's why the market sits here and just goes backwards and forwards. Because the market knows. I don't care if gold's down today. The market already knows we're in an inflation bubble. It knows. It's just trying to hang on, Sloopy, till December. Because that's when the money managers get paid their Ferrari $1 million, $100 million bonuses. That's what you're all waiting for. Don't sell. Hang in there. If we go through 6,100, you're not getting your bonus, people. You're not getting it. That's why they let the algos keep defending this and holding this up and praying. Because that inflation bubble, it's coming fast. It's coming furious. I just don't know when it's going to hit. Maybe it's January, maybe it's February, but the window dressers are trying to pull this and drag it to the end of the year like Cinderella with it. They'll like expire. Let's blow up at the strike of 12 on December 31st. Something's up. I'm with Don. If you're buying here, it means you have no sense of how to manage risk whatsoever, unless like you're getting in and out. If you're trading in and out and scalping with Corey and Tony, fantastic, because Tony doesn't hold overnight. He's got no exposure. Who cares? Executive weight. Anybody get the pun executive weight? Where does the pun executive weight come from? Anybody get it at all? There's a pun there. There's always a pun in my lines. Okay, so Trump has come out as of last night and he says, okay, enough is enough. Eli Lilly, no more. Novo Nordisk, no more. He slapped them, and he slapped them hard. You take a look and you tell me, people, what's happening here. Trump says that the weight loss drugs like Wegovy and Ozempic, he's not banning them. He can't do that. He's saying, I am now officially putting a price control on it, maxed out at $150. That's what he said. Good night. That's why it's down 25. Now, for me personally, Genesis Cog always sells broken channels. So we would have sold that. That's a broken upward channel. Down, if it's a sideways channel, we don't always. Broken upward channels lose momentum. They fall quickly. You should have sold this yesterday. You should have sold it right there. See that red flag at 850? That was your trigger to sell. Somebody already knew about this. They already knew about this. You didn't know, but somebody knew. That's why they blew out right there. Now we find out why. That is going to punish not only Lilly, but it's also going to punish, okay, Novo Nordisk. It's going to take that sucker down too. And that one's already in like a terrible crapsville. That one is like in a I call a penalty box, and it ain't coming out of that penalty box. It's getting cheap at 13 times earnings, but Novo Nordisk is like a one-trick pony. And because it's a one-trick pony, it leaves you in a terrible lurch, is what it does. So when you look at something like this, I wouldn't buy this stock at all. I wouldn't buy it. I don't like the way it looks. It's trying to break out, but because there's too much headline risk, I would avoid it. It's too late to short. It's too early to buy. But what I'm trying to tell you is that you have to go through and you have to research this stuff. You have to realize that companies that are charging these exorbitant amount for dosages of drugs, Trump is going to come try to control the inflationary environment part of it. He's not controlling restaurants. He's clearly not controlling the railroads. But this, he can have his say with RFK. They're going after these companies for overcharging and protecting Americans. If I were you, I'd be very careful. Lilly trades at a ridiculous valuation. Look at that value. You don't think that could go to 20 times earnings? You better think again. If I were you, I'd hedge this like crazy. This could easily go down to 600 before you even get off the toilet. Be careful. Last but not least today, last but not least, look at the market just grinding away here. I told you can buy all you want, TheoTrade members. Just keep buying. When it goes to 5,000, we'll see. I keep telling you, gotta play defensive now. The momentum's gone. You're just hanging on, and you're ignoring 1,000 fundamentals coming in. It's like a death by 1,000 knives coming at you, people. Let's just keep dodging. Eventually, it'll catch all of you. You'll see. Last but not least, cruise control. I'm not the authority on this. I'm going to give that over to Garrett Baldwin. But this caught my attention, so let's just talk about it for just a second. So NCLH. Okay, what's going on here? There's a lot of bad press coming out. These stocks are not financially in trouble. They're not. They're well capitalized. The American economy is not falling apart, but you can start to see them, they're rolling over. Why? Why with the market at an all-time high? Because these are wealth effect stocks. If the market's up, these shadow the market. If you superimposed these charts on the S&P, they're moving in lockstep together. Every time the S&P goes up, Royal Caribbean goes with it. Because the richer people get, the more they take cruises. It's that translation. Here's the deal. They're gouging people. I'm already booked for a cruise next year, and they're gouging the hell out of me. I know that. But I got a good deal to start with. The average person can get on a cruise for like $1,500, but by the time you get off the cruise, you spend another $3,500 on ancillary stuff. American public's pushing back, and they're running commercials pushing back on Norwegian saying, okay, stop screwing us. They're gouging us. That bad press is starting to weigh on Royal Caribbean. It's starting to weigh on Carnival. Be aware, people. The most important dimension of the market, the number one, psychology and narrative. That's the most important thing. Fundamentals is number 2. Technicals is number 3. Liquidity is number 4. Garrett calls it number 1. I don't. Psychology is number 1. Because no matter how much liquidity is out there, if you think something's worthless, Garrett, you don't care. You could have $1 billion in your pocket and you won't buy it. You have to think it's worth something a lot much more than it is. This is a problem. They have bad press, and as the economy weakens, these stocks are going to shadow the S&P. The lower the S&P goes, the lower this stock is going to go, because they're a correlation factor. The wealth effect is eroded. People feel poorer. They don't book cruises as much. That's a fact. The wealthy, they don't care. But the average individual who wants to travel, loves cruises because it's affordable, it's economical, it's price performance, it delivers. It's a floating hotel on water. It's great. You don't need to rent a car. Okay. Takes you places that you can't even imagine. Watch this stock. Could it go lower? Yes. But the problem is it's got a lot of bad press. So I call it cruise control. Get it? Because they've, again, are they under control? They're not. The cruise control is to the downside. All right. Let's move up to the final installment of the week that was. And the week that was is obviously known as look out below. Okay. And you'll see me bring it to you here. Sorry. Tools to measure market drawdowns. When I say market, I'm referring to the Russell 2000, the S&P 500, the Dow, or the NASDAQ. Pick any one of those four major bellwether indices, and I think you know where I'm coming from. That's all that matters. Now, I've been through all of these. I'm not going to do a recap. If you want to get the recap, you can go into my archive. It's the Bierman, it's a personal archive. Jeffrey Bierman archive. It's there for take it. Go with it. You'll find it under, there's 11 categories. You'll find under market, under volatility. Okay. My archive is really, you can go, it's literally like the bottom of the Marianas Trench. It goes down for like 10, 20 minutes in every one of these things. I've been here, I'm the longest tenured employee outside of Don and Jeff Roth. So let it stand for on its own. I've covered everything up until the reverse engineering RSI and MACD. I'm not here to scare you. I'm here to bring reality. Scare means like there might be an element of reality. There might be an element of fabrication. This isn't an element of fabrication. I'm not a gut check guy. I'm not that guy. I don't go on gut. I don't go on empirical eyesight. I don't care. I go on numbers. I'm a numbers freak. Numbers made me rich. Opinions and narrative have ruined my life. I don't listen to anybody anymore. I just go off of what the numbers tell me, because the numbers are right and people are usually wrong, and they get caught at the worst extremes. I'm going to introduce to you the RSI, reverse engineering RSI. Now, I'm not here to give you a full-blown lecture on it. If that's what you want, you're not going to get it. You can get it if you decide to go into my archive, into the market strength category, and you'll see 2 or 3 reverse engineering RSIs. All I care about is this. I want you to be a TheoTrade member forever, as long as you live, or your family legacy, and I want you to be a Genesis Cog member forever, okay? We are not here in the business of being heroes. We are here in the business of making money. And the way we make money is simple. If you got the risk managed correctly, the money will flow. It will flow. If you have the risk managed incorrectly, at some point you will be exposed. You'll make a lot of money, and in a short period of time, you're like, oh my God, I cannot believe it. I gave back 50% in a month. That's exactly what happened in April. A lot of you came to me. I saw people saying, my God, I was down 30% in a month. I know. That's the nature of the business. It's the nature of the beast. If you don't manage it, you're going to get dinged one way. Even experts, and I'm an expert. I've been dinged many times. So what I do is I just volatility map. Drawdown simply means how far might this fall before it finally settles in and adjusts. So I introduced the linear regression lines, the channels, the standard deviation, the Bollinger. This one's a different animal. This one's going to mess you up. So please don't send me, I beg of you, don't send me an email. Go into the archive or Google it, because for me to explain this will take 4 hours. But I'm going to condense this into 4 minutes. 4 minutes. So here's how it goes. Reverse engineering does not predict. Stop. It doesn't predict. It doesn't say this is going to happen. That's not what it says. It says this is what could happen. Big difference. One is a done deal. The other one's what's called probability or potential. But what I've learned in this business after all these years is what can happen in this business, and I've been dinged so many times, what can happen usually does happen. So the reverse engineering RSI is a playoff of Wells Wilder's RSI. I've covered the RSI for 30 years. I've covered it on Theo for 10 years. Everybody knows the RSI. It's a strength indicator. It's an oscillator. It's bounded. It's Wells Wilder. It's got the smoothing factor. Okay, this is what it does. The value of the reverse engineering. It takes the data from where it currently is, and like Alice through the looking glass, it reverses the data. It takes where it is now, it flips it forward based upon like a beta tested model. And it's just the RSI model, like Alice through the looking glass flipped forward. And it says, based on a 14-month, I'm gonna look at it monthly, not daily. I don't care what a daily, screw it. It obfuscates, you need the smoothing factor. I'm only gonna do it just based upon one thing. 14 months, which is the default right there. That's an RSI of 50%. That's the default. What does that mean? It means you're dead center in the middle of the RSI. That's what it means. So if the RSI now reads, let's say 80, this is the RSI at 50. So an RSI at 50 means that there's a 50% chance it could go higher or lower. When an RSI is 60, it falls into the strength category, and it means the algos buy. When the RSI slips into the 40 category, the algos sell. The weaker the RSI gets, the more the algos press the issue. They walk it into existence. The stronger it gets, the more the algos buy. So this creates momentum. It's a momentum indicator that captures strength in a 14-period look back to the present is what it does. So what the RSI reverse engineering says, wherever you are right now, today, and we'll look at it right now, wherever you are today, it tells you going forward where the oversold condition is. How sexy is that? Oh my God. Oh, it's unbelievable. It's the best. It's one of the greatest I've been in this business long. This is one of the 10 greatest indicators ever made. Why? Because it ain't backward looking. Backward looking indicators are worthless. Don's an anti-dentite. He hates charts. You know why he hates charts? Because charts are driving a car looking through the rearview mirror. He's right. That's the problem. Charts don't tell you what something's worth. They only tell you what's happening right now. The value of a chart is not for you to predict. That's a waste of time. Tony Rago never predicts. He makes millions because he doesn't predict. All he does is he volatility maps and trades and then kills it. It's exactly right. Corey doesn't predict. He volatility maps in his system and he makes millions. That's how we do it. Nobody at Theo predicts. Nobody. We don't predict. We just show the math and we say, here's the math. Let's play. This doesn't look behind. It projects forward. So for instance, if you were looking at an RSI on the weekly, because it already adjusts to the weekly, the RSI right now on the S&P is at a 64. It's really strong. That's like stupid strong. Why do you think the algos come in every day and bid this hour? Stop with people. Okay, TheoTrade members, stop with the people. Stop. There are no people. The algos are buying this because why? Because they have strength. But if it goes through 50, the algo CPU, the center brain of the algo goes, oh wait, we're below 50. Let's sell. And there's nothing you can do about it. You can try to fight it. You can pray that somebody buys the bid and can overcome the algo. But if institutions don't buy, the algos will drain it and destroy the market. You're in a 64 handle. Translation, okay, the market has relative strength. The problem with the indicator is it's backward, it's looking concurrently. Now, so it's come off its high of 72 to 64. That's what we call a bearish divergence. But that's not bearish. It's just a slight divergence. If you want to get that bearish, you take it through the 50. So there's a 14% what we call bumper cushion built into this. It's 14%. That's what's built into this. That it's stronger. So the translation in English, benefit of the doubt goes to the buyer. That's what that means. Benefit of the doubt goes to the buyer. And that's why it's holding. Now, here's what I want to show you. Reverse engineering. This does not predict what's going to happen. It just says, if we switch this to an oversold condition, and by definition, an oversold condition, and it's called oversold light, get the pun, oversold light. There's what's called oversold heavy, which would be a 20. Oversold 10 means it's the end of the world. Oversold 30 means standardized light oversold condition. It's not deeply oversold, but it's oversold. Ready? Here we go. Let's take a look. People, Stop with your opinions. Nobody wants to hear. The news media will spout opinions. They will bring people on at certain times, slip them in there. Tom Lee, I'm bullish. Well, Tom, you've been bullish. When you were bullish when the market was at 6,000 and it dropped to 3,000. You're not paid to be bearish. You're useless because you're never going to be bearish. He takes so much credit. The fact of the matter is he's brilliant. But Tom, when it's bearish, call it for what it is. Say it's bearish and get your clients out. He can't. He's a permabull. He locked himself in. I'm not a permabull. I'm just a realist. Here's the market. Here's an RSI oversold. Now, here is what the reverse engineering RSI is telling you. If you tell me the market's going to correct and do a drawdown, bam, all right, woohoo! Tell me, where might it go? Where might that bottom come? And bam, we can start buying. Right there. It's right there. This is self-adjusting. It's projecting forward where the current RSI is at 64.5, and it's flipping it forward in the same model as if you were turning it around 180 degrees, Alice in the Looking Glass. It's telling you at 5,300, the S&P is bottom. There it is. And markets will likely overshoot. It's going to overshoot. So just for kicks, this is what we'll do. We'll throw it to a 25. Why not? Why? Because at 5,300, the margin calls are going to come in thick and furious. So let's overextend the RSI. 4,800. That's why I come in every day. People are like, why is Bierman so bearish? I'm not bearish. I'm just realistic. Numbers are never wrong, people. You are. Look at the number. Make up your mind. You want to ride this? Go for it. But I wouldn't buy this market until it got to at 4,800. I'm backing up the truck. Ask anybody. I got a 60% cash, 60% long cash. I'm 20% short, 20% long, 60% cash. I'm the king. Cash is king, baby. I'm in the best position of all of you. I can do whatever the hell I want. If it tanks, I can short it. I can do whatever I want. But buying here and you're wrong and you get locked in and margined, you're dead. There's no way to get out of this. So this is just saying, if you want the market truly, truly oversold, and in the Genesis Cog model, all we simply do is, and we're realists. We're not extremists. We're not perma-bullish. We're not perma-bearish. We're just like, okay, if hell fire hits and the SHIT hits the fan, where do we go in this model? And this is one of many models. You can look at the Bollinger Bands. You can look at the regressions. You can look at the drawdowns. You can look at the channel, the horizontal. Pull them all out. Overlay all of them. They all say the same thing. 5,300 to 4,800 is our destination. Go with it, people. Because when it happens, you're going to sit there and go, hey, we're at 4,800. It's exactly what Bierman said on October 17th. I don't predict. It's just the math. It's just math. That's it. I'm not a psychic. I'm just looking at it going, all right, you want to get me in there? You want to get a piece of me? I'll buy you at 4,800. Get me deeply oversold, and you got my attention. But over here, I'm not interested at all. I'd rather you be short and ride this through the end of the year. Go get short now. Get short right now. Okay, go on a cruise with Royal Caribbean and show up in 6 months and see how you're doing. You probably have to buy 10 cruises after that one. People, this is a setup for absolute disaster. I love Gianni. The guy is brilliant, but this is not the time. You don't have any tailwinds. You're running out of Fed cuts. The only reason why the market's holding today is because Trump allayed the fears of the market. How many times can you give lip service? And the Fed's like, okay, we're going to have to accelerate the cuts. When we run out of cuts, what's left? Inflation, layoffs, AI displacing. What's left? It's just, you're on borrowed time, people. The Pandora's box is open. This is just saying, look, if you really want to wash this market out healthily, get it there. And that's a 25. If you even said to me, I just wanted to go to 50, and 50 would take it right back to the midpoint. It's almost like hitting a linear regression trend line and saying, yeah, I hit the 50. Let me show you what it would look like. Even if this only drew down, it just went to a 50 handle, which is nothing. That's not even oversold. That goes right back to the midpoint of the RSI where it could pivot in either direction and maybe even go back up. You're still at 6,300. So what you're telling me is that if you ran my money, Bierman, I've got $1 million of your money. I'm going to buy today. I'd fire you. Are you kidding me? You're going to buy knowing that there's a $325 risk just to the midpoint, which is the trend line of the RSI. How ridiculous is that? You're putting my money at risk to make 150 to lose 325. I'm done. Give me my money back. You're fired. I don't want you touching my money. It's too much risk in this type of environment. You're trying to buy on the way down. You're trying to buy when there's like a billion headwinds against you. You have no tailwinds. You're hanging on a wing and a prayer, people. This is telling you that the best case scenario, this is a best case scenario. Best, you're looking at 6,300. Worst, you take it down to 4,800. Will it happen? I don't know. But that's the technical setup for it. And these technical setups, they're pretty remarkably accurate. And when the algorithms see it take out 6,500, you just don't understand. They're not going to stop selling. They're going to do this over and over and over until it looks like this one relentless straight down line. You're like, oh my God, you can't catch a falling piano. You saw what happened to Lily. Drip, drip, slam. This is a drip. If it opens up the faucet, we go through 6,300, it just becomes like, it's like literally you're like falling without a parachute. Be very careful how you're treading here. Very careful. I don't even watch minute. You want to watch minute by the S&P? You watch. I don't even watch the S&P. I just watch individual stocks that I track. The S&P, when the individual stocks rally, I know the S&Ps have tanked because I got the ones I want long. And when my shorts tank, I know one thing, the S&P's down. I know that. That's all I have to do is watch my short trades and I know the S&P's down. Can't emphasize, don't take this ride down. I want you as a member. So lighten up here, scale back your long positions, buy the puts, short the futures, okay? Start to play. You don't have to even play volatility. Just play to protect. The best offense is a good defense in this environment, period. Last but not least, I'm going to take you to my favorite indicator, period. My favorite indicator is the MACD. Now, I am not going to spend one iota of time discussing it because I have at least 24 MACD coaching sessions. This is my favorite indicator now and forever. This is the indicator that's made me more money than any single indicator. I tell this to Garrett and I tell this to Blake all the time. The MACD is never wrong. It just is never wrong. It's always on the right side of every trade. What the MACD is telling you right now is buy the dips. It is. On the weekly, it's buy the dips. But it's telling you that if this were to curl over and the slope integrity changes, the buying on the dips will be the actual elixir that will destroy it will wreck your portfolio. It will ruin it. It only works as long as it holds that gold line. Once it goes through there and starts down and the bearish momentum picks up, the trend may be still up, but the momentum itself will be turning. If that threatens that zero line, it's end of days for this market. End of days. You got to pray we don't go through that zero line. You can buy on those dips because the trend is up. But if it goes through the zero line and goes through that signal line, that MACD blue line, it's all over. There's no day. You're going to be praying. Like you'll sit here and go, man, I could have blown out at 66.58 like Bierman said and not suffered this. You better pray that that doesn't break. That's your only hope in the longer term. Day to day, I don't care. It's the long term I care about. Because once it starts down, it looks like this. That's what it looks like. Look, that's what it looks like. And then it starts to speed up. The more you fall, there's no speed here. The dippers are going to win. The dippers get destroyed at the bottom. That's how it works. Dippers get wasted at bottoms because we don't crash from tops. We crash from bottoms. See, that's the trick. So here is what the reverse engineering MACD does. Okay. I'm not going to go into every single component. It's a waste of time. I don't want to do it. Okay. For me to walk you through reverse engineering MACD would literally take me 3 hours. It takes literally 2 to 3 hours to walk you through every one of these. So I'm going to make this clean and clear and simple. Okay. There are 4 different plots here. There's only one that matters when it comes to measuring risk, volatility, and mapping volatility and drawdown. There's only one in the reverse engineering reverse engineering MACD. It's called the PMACD level. I'm going to change this to a 4 spot. 4. I'm going to thicken it so you can't miss it. It'll hit you like a ton of bricks in your face. The other ones will be muted. This is all that matters. In fact, I will hide each one of those so you don't even look at them. See the plot? Hiding it. See that plot? hiding it. I'm going to hide every one of these plots. I don't want you to even look at them because they're going to obfuscate and confuse you. All you need to do is look at the PMACD level. Here is what the PMACD level is telling you. Okay, it's right down there at 4154, 4155. Now, here is what it means, and I mean, and I'm trying to do this as sweetly and as nicely as possible. I'm going to be as general layman as I can. I'm going to try to get away from the academic world. I promise, Brett, I'm not going to go academic and make people hang up on me. I'm going to be simple layman as if I'm talking to my 12-year-old daughter. Okay, simple. All this says is that if you took the current configuration of the MACD, the current configuration, so let me take the RSI off, take it off. I'll put on the MACD, okay? The current configuration. If you took the current configuration of the MACD, this right here, and you were to flip it 180 degrees, like Alice through the looking glass, turn it around. You know how like you have like a fireplace where you hit like a lever from like Indiana Jones and the Crystal Skull, or Indiana Jones with the father, when they go to Petra, I call it the Last Crusade, and Sean Connery pulls the lever and it flips around like it's in a castle. It's like a 180-degree turn. All you do is flip it upside down. It's saying that based upon the MACD momentum model, it's a price momentum model of moving averages, which are called in the second exponential. It's called second moment. That's very complicated, but I'll keep it simple. Flip it upside down. Where is the bottom of the MACD before it actually bottoms out? So it's saying that if this MACD corrects, like I say it will, because it will eventually, if it goes full throttle, and this is the key word, full throttle, it's like they say in Defense Department, DEFCON 5. If the crap hits the fan, worst case scenario, that's what I love about this. Worst case scenario, what is the MACD saying on the reverse engineering if all of a sudden the S&P crapped out and we literally just melted to nothingsville? How far would the S&P fall before the MACD? See that configuration right here, people? Flip it upside down. Instead of the MACD curling over to correct, which it's doing, and I've warned you at that, when the MACD's down 500, when this is down 500, every one of you is going to send me a letter going, you're right. I know you will. So I'm not going to even argue here. I'm just saying that I don't know if it's going to go to 4157. It might not. But this is saying that just based upon the current configuration, that if you were to flip this completely upside down, so the MACD were curling to go up and break to a bullish signal, where would the bottom be? Where would the MACD have to be to get a buy signal on a weekly 2-year chart based upon the default 12.26.9? And those aren't days, those are weeks. So I didn't mess with the Wells-Wilder, the original variable lengths. I didn't touch them. This is the de facto, people. Don't mess with a good thing. Look at it. It's telling you, for you permables, hey, permable, Gianni, this is telling you that if things get terrible, the worst case scenario, we're looking at 4,100. Sit down there and roll that around your head. Everybody, sit down there and digest that. But that's never going to happen. Uh-huh. Oh, sure. And Peloton at 155 is never going to 4. Oh my God, Meta went to 380. It's never going to 80. Stop with the nevers. Stop. I used to talk like that around Don, and Don used to like whack me. I used to walk around the floor at Thinkorswim going, that's not going to happen. I got beaten to death by every trader in there. Scott Sheridan's like, you got to stop talking like that. Even Sosnoff's like, anything can happen. I'm not saying it's going to happen. I'm just saying, like, if it happens, it's not like you didn't have advance notice. You did. I told you. This is what the model says. So here's like the summary, because when I bring you to the bottom, the bottom line of this, what's the bottom line? The drawdown lesson? What's the drawdown lesson? The drawdown lesson is this. Pick any one of them. I don't care. It's your money, not mine. My only goal is to give you the tool. Here are the tools. Figure out what to do. Pick the price level. Pick price percentage. Pick standard deviation channel. Bollinger regression. I laid out 7. Here, please, take my wife. Whatever. I don't care. Measure twice, cut once. You don't think this is going to happen. And when it does happen, it's not like I didn't give you a chance. It's like I'm letting you run loose in like the Hunger Games. I'm letting you live, is what I'm telling you. And you can go do whatever you want. But eventually, Everything in this business comes to haunt you. It's gonna catch you. There's no way to avoid this. It's just math and gravity, people. I'm not a genius. I just understand how math works. They're gonna get it when they turn the momentum down and they break the trend. They're just gonna do a standardized, plain vanilla, garden variety correction. We're gonna correct 10%. There's nothing you can do about it. Just fight it all the way. I'm just saying, you need to go beyond. Why do you need to go beyond here? Why is the lesson? Because I learned a long time through Don that whatever you think is bad, Don taught me, he's right. It's going to be way worse. It's always way worse than you think. Both directions. It's like, I'm short here. And you're like, it can't get any worse than this. And then it goes up another 50 bucks. It's up. It's AppLovin's up to 600. It can't go any higher than that. 700. Every time you tell me it can't go any higher, it's going higher. That's how it works. Because you keep laying in your short, you keep getting more algo FOMO, combined people chasing, call buying, zero DT, and it fires it upward. You have to be realistic here. People sitting here, how many of you told me that AppLovin got to 400? That's the end of AppLovin. Yeah, it went to 745. Zip it, Zippy. Stop. They can go to 1 billion. Nobody knows. All I know is that every time something runs, my first thought when I'm long is, this always goes through my mind, what's the drawdown? What's the drawdown? Because I run a portfolio for Genesis Cog. We've got 20 positions. We've got 10 in the model portfolio. My job, to make these people money. That's my job. If I give it away, you think they're going to like renew membership? I want to protect the profits. I don't want to give away big winners, and I want to cut the losers short. So every time I walk in, I go, listen, let's do the risk first. We'll worry about the reward second. There is no reward if the risk is wrong, because it only takes a day to wipe you out. You saw that yesterday when we were up 20 and we ended down 85. There's a 1% reversal, and that's like nothing. Wait till we're down 10%. Then all of a sudden people are like, I feel I'm having an angina. You'll feel it. I've been there. I know what it's like. I've been there many times. Lost 100,000 in a day. Done that. You have to understand, when you're in war, you got to give the veterans the respect. I earn the respect because I've lost enough money to prove it to you. Okay. I'm not fighting the algos. I'm not fighting math. AppLovin is still a bullish stock. It's still bullish. Look, this is actually bullish. But the drawdown of AppLovin that says 386, that's not possible. That's not possible at all. Because AppLovin, because the configuration of the data shows no volatility, it was flat here, you'd have to actually take this down to a daily, and it would probably have some efficacy. So let's go to the daily. There's the daily. It's telling you that if the MACD flips, and the MACD is already on the way down, so it's telling you that at 525, AppLovin's probably going to get a huge bid. That's just the daily. So the weekly doesn't work for AppLovin, but for stocks that have been around for 20, 30 years that have plenty of volatility and good data points, not corrupt, you can run the statistic test, the p-test. It really works. I'm just telling you, you need to get prepared for this. I don't want to hear from I don't want an email from any of you, or I'm sure Don doesn't. We're saying, you guys have been preparing this all through October, and somehow it happens in December. It doesn't matter. It doesn't matter if it happens December or January. It just happens. So while you're scaling away and nailing little profits of like 200 here, 200 here, I don't want you to lose 20,000 and give back those 30 great wins. I don't want that. Nobody cares about a hero. They only care about survivors. And I've made millions trading the internet stocks. I bought a Porsche. I know what it's like. And I know what it's like to give it all back. You think you're invincible. The market goes out of its way every single day to convince you you're really smart. And then the next day it's like, oh my God, I'm not so smart because I bought it here and it came down $2. I could have waited. But of course, it's the nature of the beast, the imperfection, the slippage, the margin of error in human behavior. Even the algos have margin of error. But all I'm trying to get through to you is, okay, you need to prepare yourself for a drawdown. Use any one of the tools. Use them all. Mark them on your thing. Why? Because it allows you to get so far ahead of the curve that, you know what you're going to say to me? Thank you for setting this up for me. You know what's going to happen? You're going to go like, I'm so prepared for this. If you're prepared for it, it doesn't mean you're not going to lose money. It means you're going to mitigate the damage. You're going to be ready for it. The worst thing in this business is when people have no game plan to protect. If you plan to fail, okay, or fail to plan, you are automatically planning to fail in this business. You will fail at some point. You have to get so far ahead of that curve in every which way. Don't carry 100% positions. Don't be 100% short. Have stops in place. Do define risk. But don't live in some type of bubble. Don't think the algorithms are going to save you. They save you on the way up. They do not save you on the way down. And that is the message I'm delivering. Okay. And the drawdown messages: measure first and then worry about the return later. Protect your profits before you give them away. On that note, I have to run downtown. I got to teach a class at Loyola today, a class in corporate finance. And the subject matter today, of all subject matters, boring, but it's capital budgeting, and it's what's called Blake, I'm teaching today the degree of operating leverage, if you know corporate finance, which is like Caterpillar and Deere. And I'm also teaching break evens, quantity of break evens, cash flow break evens, and financial break evens of how many widgets to produce to make sure you're.
Yes.
That's what I have to teach. And Blake, I've got 49 in the class, only 25 ever show. And that, and people tell me it's normal. And all 25, except for one kid who works for Goldman Sachs, he works for Goldman. All 24 look at me with a blank stare every time I open my mouth. I'm not, but yet they did well in the exam. Only one kid knows all the answers, and it makes me think, Blake, our future is not secure.
Well,
what do you think? You got
there'll be other people that are doing well. I mean, I like my kids. They're all college age or graduated. So there's those that do dedicate and go through. So
you got 3 boys. How are your 3 boys, may I ask?
They're good. I mean, the oldest is graduated, and second one is going slowly, and third one's trying to become a pilot. So they're all pursuing careers. So
third one's trying to become a pilot?
Yep, he's almost done with his personal, and he'll go into instrument rating. So
oh, goodness gracious. Well, my daughter's 12 going on like 30. So I'm in like
going on 30.
I'm in a whole world of trouble. No,
yes,
but
you are.
She earned her yellow, and she's on her way to her orange belt. She's got a really nasty jab and a really, really mean sidekick. I'm not messing with that girl anymore at age 60. She's learning. She's also 5'2", and my wife's only 4'11". So it's a good sign that she's drinking a lot of milk, because I'm 6'2", my wife's 4'11". Big difference.
There you go. So she's going to be there in the middle there.
I hope so.
And tough as nails.
Tough as nails. I pray the best for her. So
yeah, that's
great.
Blake,
I'm gonna turn this over to you, and I'm gonna grab some lunch and head downtown. Have a great weekend. By the way, Blake, did you see that they ranked in Forbes the best city in America to move to? Guess what it was? Salt Lake City, St. George.
Yep.
Number 1.
Yep. Well, those are 4 hours apart, just so you know. But yes,
they are.
Yeah, Salt Lake City and St. George are 4 hours apart. But
so they said, like, between those ranges, like, go to Salt Lake City and look for parts of. I guess the guy doesn't know Utah very well, but they really think Salt Lake City is the most livable city in the United States of America, which is bad for you because it means more people are going to come in.
Well, I'll just drive up my price and sell my house and move to somewhere else. Somewhere warmer. It's getting really cold. We're in the low 40s today again. So
all right.
All right. Thanks, Professor. Have a good weekend.
You too. Bye.
All right. Bye. All right. Good afternoon. Good morning, depending on where you're at. I guess there's not